Well, April 15th is fast approaching, and before you know it, tax day will be here. So if you haven't filed your taxes yet, it needs to be on your radar. But for some people, especially if you have back taxes, it may not be that simple. And joining me to talk all about it, Ronnie Peralta and Jim Angus, both with Delaware Community Reinvestment Action Council in Georgetown. Gentlemen, thank you for being here. So Ronnie, we're going to start with you real quick. Tell us a little bit about the organization.
Well, our name is DCRAC. We are a nonprofit organization. We've been around for 25 years. We have 3 clinics, a housing clinic, a tax clinic, and a credit clinic. We have an office in Georgetown, Delaware, and we help with controversy cases with the IRS.
Involving taxes, and we're going to talk about taxes now. You know, Jim, when it comes to doing taxes, what are the main things that people need in front of them in order for you guys to do your job?
Well, if they're anything like me, it begins with waking up that one morning and having the resolve that this is the day you're going to start to settle your accounts with the United States government for the year 2012. And when you start to settle those accounts, begin at the easy place. And the easy place is the information that has been sent to you mostly since the end of January. The most common income statement is the W-2 form, that if you're an employee of an organization, you get the W-2. It lists your gross income for the year and the amount of money that has been withheld by the federal government and the state government. Now, there are also another indicia of income that you receive in the mail, and I'm going to call these the 1099s. If you received unemployment compensation during the year, you'll get a 1099-G. That is a form that will explain how much income you report for unemployment compensation. Another common 1099 is if you're not an employee, but you work for an employer who pays you and considers you an independent contractor, then you will get a 1099 explaining how much income you were paid during the year.
As well as people who are collecting Social Security as well.
Yes, and that gets into the 1099-R.
Got it.
The 1099-R is a statement of your retirement income, your pension income, and then you'll also get statements from your banks on the interest that you earn and investment income. So those are the easy things to assemble. They're the documents that you've received within the last 4 to 6 weeks. And once you have that information together, for most taxpayers, you're almost halfway there.
You're good to go for the next one. All right,
yes.
So the first thing we want to talk about is we very often hear the term dependent. What is meant by that, and who can be a dependent?
I'm going to start with the easy and common explanation for a dependent. The most common dependent is your child that has lived with you for at least half of the year, who is under the age of 18 and for whom you have provided the majority of support. That is the easy and most common dependent that you would claim on a tax return. However, there are many rules involved in who also may be a dependent that you can claim on your taxes. If you have people living in your household who may be related to you by marriage or by blood, and for whom you have provided their overwhelming support for the year, you may be able to claim them as a dependent on your tax return. But to know the answer in a specific case that's not your own child, you really should go to the IRS.gov website, put in the search term dependent, and a publication will come up explaining all the rules for who the people are that you can claim as
dependent. So you can get all of the information there, because obviously there's a lot to talk about regarding that. Now, the other thing too we want to talk about are deductions. What can someone claim when doing their taxes?
Well, you start with what the government gives you. For example, if you're single, the government gives you a standard deduction of $5,950. If you're married filing jointly, the government gives you a standard deduction of $11,900. However, there are many cases where you have mortgage interest, as an example, where your deductions may exceed the amounts allowed by the government. Common examples of those are medical and dental expenses. If you've had unusual medical or dental expenses or health insurance premiums for the year, those can be deductible. The second part are taxes, state and local income taxes, real estate taxes, personal property taxes. Those are also deductible. The most common one that people know about is home mortgage interest deduction on a primary residence and sometimes on a vacation residence. That form would have been provided to you in what is called a 1098 in most cases by your mortgagor, and that is a deduction you can take.
And we should also mention too, because we have some other ones we want to get to, there's charitable gifts and unreimbursed employee expenses as well, so you can do all of that. Now, with your organization, you guys deal mainly with people who have back taxes. So why is it so important to get your back taxes sort of brought up to date, up to par?
Well, the crux of the work that we do at the tax clinic is people who have a controversy with the IRS will come to us for our services. And by controversy, what I'm talking about is they generally owe money to the IRS for a period of time that can be small or it can be quite significant. And they're unsure of how they go about dealing with the IRS to resolve their problem. The first thing we undertake is to work with them to determine if the liability the government says they owe, whether that in fact is what they owe. And let's assume that it's either that amount or it's another amount. The next step is to work out an agreement with the IRS that allows them to come into compliance. The agreement can be an installment agreement or it can be an offer and compromise as examples. However, before the IRS will even begin to talk to us or you about resolving your tax liability, you need to be current with all your tax filings with the IRS.
Which is very important. So people need to get that up to date and obviously focus on that. So
Yes.
the other thing too, Ronnie, we're going to go to you now. There are services out there that can help people. Tell us a little bit about them. There's three main ones.
Yeah, there's 3 services available that you can access. One of them is AARP, which is for senior citizens if you need to do your free taxes this year.
Here there's the First State Community Action.
First State Community Action, which is a BITA site. That's where you're going to have your free taxes done. And then the third one would be My Free Taxes Delaware, which is online. You can do it if you make less than $50,000.
So there's obviously a lot of resources out there for people. Now you guys are having 2 workshops coming up next month to help people with their taxes. We're going to go through them here, the event details. The first one, Thursday, April 4th at 12 p.m. to 1:45 p.m. at the Milford Public Library. And then there's also going to be a second one that same day on the 4th. That one is from 5 to 6:45 in the evening, and it's at your guys' main office in Georgetown, and we'll have all that information on our website. So a lot of great information. Thank you guys for being here today and discussing it. It's very timely, obviously. And for more information on the Delaware Community Reinvestment Action Council and the upcoming workshops, just go to our website, delmarvalife.com, and click on the show tab. And we're digging a bit deeper into the tax talk. Up next on Delmarva Life, what's fact and what's fiction when it comes to our property taxes. And while we're talking money, we've teamed up with Sussex County Federal Credit Union to help you make better sense of your money. Here's Deb with this week's tip.
On behalf of Sussex County Federal Credit Union, I'm Debbie Jewell with this week's Dollars and Cents tip. As the tax deadline is quickly approaching, many consumers are hoping to get a tax refund. Last year, the average tax refund was more than $2,900. If you hope to be on the receiving end of taxes this year, there are some smart ways to invest and use your tax return. Having a financial plan in place will help you resist impulse spending with your newfound money, especially on items that have no long-term value. Here are some smart ways to invest your tax refund. Invest in a CD. Establish and contribute to an IRA. Put money into an emergency savings account. Start a college savings fund. Meet with a financial planner, and most importantly, pay down debt. This is how you can make wise use of your tax money to help provide you with greater financial security and stability. Together, we can achieve more.